great week. Welcome to the OO show. We are minus Troy.
That's right.
Plus Rusty. Ready for the weekend. Let's get it rolling.
Back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
All right, welcome to the show. Hope everybody has had a great week this week. And we are without Troy, but we have Rusty. So we're still 3 strong today. Dan is coming to us.
It's a poor substitute.
Across the world. Across the world, we're going to take advantage of this time without Troy to make fun of LeBron James.
Good. I'm
cigars.
In. Yes.
UT.
That's
I don't know. Probably not with Rusty on, but
and
Dan.
We can talk about how pipes are superior to cigars. If we did that for the next 45 minutes, I feel like it'd be time well spent.
Right.
We'll put a poll in the Discord. Are you a cigar or are you a pipe person? Where's your favorite place to get tobacco? Do you like tobacco from Georgia? Do you like tobacco from Nantucket? Where do you like tobacco from? What's going on with this market, fellas? Let's see. Just to review, let's take a quick look. Futures are up 60 points.
Yes.
So, and this is after a spicy day yesterday. So let's just review yesterday.
Yeah.
So, personally, one of the benefits, I've been automated trading now for a year, almost a year, exclusively. And it's so much less chart watching. And so I kind of knew where the market was, and it was a Thursday. So, my expectations were that it was going to be a Thursday, and we opened right around, we opened around 56.20, right? And got up 40 points. Felt like a Thursday, and then it kind of, sold back down, but chopped around. And then the MOC, right after the MOC, we were at 56.40 and had a 43-point move down in the last 10 minutes of the market.
Yeah.
So,
and you see it double move because the first move happens at 10 till,
yes.
And then the second MOC right there when NASDAQ, when Q's close, was even bigger move, which tells you it's kind of tech related, perhaps.
Fantastic point.
Yeah.
So something that is talked about often is MOC. What are we talking about with MOC? If anybody doesn't know, that's the market on close. That is at 350. And there's actually people and resources out there who trade around this number because there's some ways to figure out if it's going to be
is there an imbalance?
Sizable move?
Yeah.
And what direction the imbalance is. But as Rusty pointed out, something talked about less frequently because in general, less of a move than NASDAQ MOC. The Qs/NDX/NASDAQ has its own MOC, and that's 5 minutes later. So if you look at yesterday's candle at 1555, we had about a 10-point dump on the NASDAQ MOC. And to take this conversation full circle, I had a trade on and I didn't know where it was. And I I had looked at it earlier in the day. I had a couple on. This one was a 0DT Wednesday. And I looked and I was like, oh, that just went to zero because we had a 40-point move in 10 minutes, which is one of the nice things is I didn't have to stress about it. I just looked
That's right.
I
That's
realized,
right.
okay, I was appropriately sized. No big deal.
Yeah.
So, but now, so what happened with these earnings last night? Dan, did you look at earnings at all or?
Yeah, I mean, it looks like one thing, just parking for a second on yesterday's earnings.
Yeah.
Microsoft, looked at that one. That moved, which you don't expect from Microsoft, moved more than 2 times the expected move. I mean, that was. This isn't. Microsoft's not Nvidia, right? But it did an impersonation yesterday a little bit, and it really moved. But as far as overnight tonight, it looks like Apple and Amazon are a bit lower. I think the expected move in Apple was down to whatever it was down near the 200, 205 area, the expected move. I think that's where we're opening. I haven't checked pre-market, but I think isn't the CEO Cook a little bit of
Tim Apple?
Apple. Moaning about the which
you just call him Tim Apple.
Tim Apple. Did I see that? Tim?
Yes.
He's moaning a little bit about the whole China thing, and so for good reason.
Tim Apple's been moaning for years about the China thing.
He has. Tim Apple has,
right.
And you also have on the plate today. I haven't seen him non-farm payrolls in the morning today, and then you have oil and CVX and stuff. But Apple should be lower, and then China supposedly bullish. But when you read when you read a little bit on now this negotiations, I'll tell you what, they're like, this thing could be a long, drawn out, just
really
the table. I mean, because you got two people that look at life totally different.
Yes. And two cultures that look at life totally different.
You hit it. Yeah. I think that's it. The culture. And
yes,
President Trump kind of comes swinging right off the bat. And China's they don't roll like that.
They do not.
So I think, hopefully they can, but it sounds like this thing could go on a while.
Yeah. It was interesting. I saw an interview the other day to your point about seeing things differently. It was wild. I can't remember who was being interviewed. Someone was some financial guy in China, and he was saying, China's been around for thousands of years. The U.S. will come and go, and China will still be here. And it was like that long. We'll take the long view on everything. We're going to take the thousands of years view. We're not worried about a tariff thing that's a few months old. And it was just mind blowing because everything we do now in our culture is soundbite, immediate feedback. What's happening next election cycle, or what's happening next month, or maybe next week. It's just a whole different mindset, which is just wild to hear.
Well, how do you get a guy from they're like respect, saving face. That's a way to come. And then you got a guy from
New York
who's like, hey, right in your face. And I mean, you couldn't more of a cultural difference. You just couldn't. I couldn't even imagine being at that first meeting.
So this is super interesting because we're a month, like Liberation Day was like a month ago, right? Yeah. I mean, we basically had a stock market crash. Can we call it a crash? I think we can call it a crash.
Correction at a minimum, right?
Well, I mean, here's the thing. We never limited down. But the NASDAQ got to the limit down level. It just didn't trip because of the technical sell up immediately. But the NASDAQ got to a limit down, I think, on that Thursday. And then the Monday, whatever. We're basically a month out from that. I think are we back to where we were?
If you actually look
Liberation Day?
If you look at April 2nd to May 2nd, we're basically the same spot.
A
month later, it's like it never happened.
Yeah,
it's like, what is that? Thanos came in and snapped, and it just, I don't know.
So
the whole crash went away.
I was listening to a podcast yesterday, and they were talking about how the biggest, two of the loudest kind of whiners that were Trump supporters, Bill Ackman and Kenny G, that Crying Bill and Kenny G, those aren't my nicknames, by the way. Those guys are much smarter than I am. they didn't, the guy was like, yeah, they just didn't monetize the vol this time. Their business is monetizing the vol and they missed their opportunity. And I thought that was, I thought that was a funny take, because you look at it and it's like, what's fundamentally changed? Well, probably a ton has fundamentally changed, but we just don't know how it's going to shake out. And the market in that month is totally unchanged. Yeah. I think you guys both made really good points. And how nice is it to have Rusty on here? It's very nice. Yeah. You made great points. Number one, a huge culture clash. So the Asian culture, there's probably scholarly names for this, but it's like a shame, honor,
shame, component, high context. Yeah.
High context. Yeah. And Trump is Trump from the, I don't know the borough. Is he from the Bronx? Like, I know even within New York, there's like different personality types. He's the, I mean, I guess the stereotypical loud New Yorker, but I've watched Trump for over 10 years now in the public space. And I mean, how many Trump, like the number of things Trump has said that are crazy are exceeded by an order of magnitudes about people freaking out about what Trump has said.
Absolutely.
And I think of this Bruce Lee quote, which is, I fear not the man who has practiced 10,000 kicks one time, but the man who has practiced one kick 10,000 times. And it's like, guys, it feels to me like Trump, he kind of just has one move. So like, you look at Trump and you look at Liberation Day.
The Bruce Lee quote. That's phenomenal. That's phenomenal.
Like, it is the same kick over and over again. I mean,
it's kind of the same kick
and kick to the face over and over.
So like, there are people who, to give our international audience,
it's from Queens. We just had someone say it's from Queens.
Thank you. Shout out to the chat, by the way. We don't shout you guys out enough. So thank you.
They fill in our knowledge gap.
Helpful chat.
Yeah.
So there are people in the US who go to therapy for Trump on a regular basis. And I'm like,
wow,
being completely,
are you messing with me?
I'm being completely serious. There are people who go to therapy for Trump. And I think not to take business away from the therapists, but maybe if whenever they thought about Trump, again, I'm being completely serious here. Like, we're all laughing. I'm smiling, but I'm 100% serious. If they thought about this Bruce Lee quote, it might help them to understand what Trump's doing, because we're not prognosticators. We're not macroeconomists, right? We're on the OO show, guys. But here's the thing. You think about it, and Trump came out with these tariffs, and even Trump supporters, Vivek, et cetera, were like, oh, he's probably not going to do what he's saying. He's hyperbole, exaggerating, which, like, that is the Trump move. He comes out, he tariffs everybody. He tariffs the penguins, right? Like, there was this big story that like this list of countries, like one of them was like a territory. There were no people, there were penguins. Everybody got tariffs. Here's where I'm going with this. People smarter than me who have been calling this macro global relationship with the US and China have said for years that probably is what is happening is a reimagining of what the globalization relationship between the US and China was, which has been developing, right? Can you say it's been developing since Nixon went to China?
Sure.
Only, as Spock says, only Nixon could go to China in Star Trek 6, I think. So Nixon goes to China, what is that, 50, 60 years ago. And you have this relationship where US industry just the Rust Belt sends all its rust over to China. So we talked about Tim Apple. Tim Apple's down 3% today. So Tim Apple has this famous quote. It's not a famous quote. It's a video clip, and you can find it very easily with a Google search. And he says, the reason we're in China is not because of low cost. China hasn't been the low cost supplier for some time. The reason we're in China is because our product requires a high degree of tooling, right? Like, I'm talking on, like, this video is like this iPhone. It's this big. You can see my fingers. It's this big.
Yeah.
It's very precise, right? So Tim Apple's like, the reason we're in China is because the expertise doesn't exist in the US anymore. the tooling expertise is now all in China. And he says something to the effect of, you couldn't fill, again, go watch the clip. It's worth a watch. But he says something to the effect of, you couldn't fill like a conference room with all the tooling engineers in the US, but yet in China, you could fill a football stadium. And
quite a diss.
Well, here's the point with that. Of course, of course, the
where are you going? Yeah, where's this going?
the U.S. what Trump is doing. Here's the tie together.
Okay, bring it home.
Seems like what Trump is doing is these 50 to 60 years of all these U.S. companies sending their manufacturing. What are the tariffs designed to do? They're designed to reverse that. And so you tariff everybody, you tariff the penguins. And yet for weeks, the US has been announcing all these countries are starting to chat with us, starting to have dialogue. And what do you have last night? You have this rumor, SPX ES moves up 50 points, that things are finally starting to move with China. So if you stood with us through that 20-minute monologue, thank you. Futures are now 70 points. And
Matt, you just moved the market.
Yes,
loves the
diagnostic guys.
People in the chat are buying futures right now.
That's right. That's right. Yeah, people are thinking, "Oh man, I like manufacturing in the U.S."
Oh, Matt, that was good.
I mean, it's just so. We'll move on to some back tests. If futures go down 20 points though, and you guys are long, let me know. And you'll get some more Star Trek quotes. You'll get some more prognosticating from somebody who doesn't know what he's talking about in this regard and just repeats what other people say.
Yeah.
So I'm going to attempt, here's what I'm going to attempt to do. I'm going to attempt to share some back tests. So I've got to get this set up. Dan, can you talk for just a second about what we've been back testing this week and how we've been looking at these, I think you call them skip strike flies, right?
Yeah, we've been doing, Troy's done a couple really good studies on the skip strike flies. And what's nice about them is you're buying an option like 100 points out of the money. And then you're selling an option maybe 10 or 20 points up. And then you're buying another option much further out of the money. So the good, the bad, and the ugly. The downside is it's a little bit extensive on the margin, right? The margin's a little bit high on this.
Yeah.
Tremendously high win rate because you're starting out a little bit from the Greeks' point of view, folks. You're starting out a little bit short delta, but you'd like it to go up, right? You'd like it to go up.
Yep.
You have this window where you can really hit a triple or a homer, but you get a small credit for it. It's a nice trade, right? It's a nice trade. Again, very high probability. I think there's some of the improvement would be, as Troy and Matt were talking about, you can cut the margin a little bit, right? But I think it's a nice trade. I think the only other thing, Matt, correct me if I'm wrong, this type of trade, again, we'd rather have lots of occurrences, right?
That's right. And so, Dan, like, what a transition. I'm going to show you a trade that I hate. You guys ready to see this trade that I hate? This trade, here's why.
Tell us more, Matt. Tell us more about
this. Is a 1-3-2. So here's what we're doing. Dan just hit the nail on the head. This is why I hate this trade. It's got 43 occurrences, and this was actually discussed
over 12 years.
Discord this morning. It's got 43 occurrences. It's 12 years. Why does it have that? Here's why. It's got this filter here. And here's why I hate this back test, even though it's done nothing but win.
Yeah.
It doesn't show the tail. It doesn't show the loser. It doesn't show your potential risk here. But this is an idea. So this is an idea. Again, I hate this back test. So just if you're new to OO,
well, Matt, I think why we're vague. Do you like this or not? I can't.
Here's the goal of back testing. Back testing is backwards looking. It's not forward looking. It's not financial advice. What is a back test? Why do you back test? You back test because the idea is to get a rigorously defined mechanical idea, something you understand, that gives you high confidence in trading it. So does this give me high confidence? No. I'm still going to post it.
So your point is that you would come up with this. Let's talk about that for a second.
Yeah.
But would you feel, would either of you guys feel good about putting significant capital behind an idea that had 43 trades over a 12-year period?
Nope. I hate it.
I put some. I mean, I get it. It would be more like, I think of, we celebrate Thanksgiving once a year, right? I mean, there could be some trades that I know, you've got your core trades that you're trading every day that do most of the work. But to me, there could be a place for trades like this, right? They're in your golf bag.
Yeah.
You don't play them all the time. Now, in terms of capital, you're right. You don't want to go, what's the allocation on this one? 10%?
Well, this one, that's a great point. And this is 10%. And so your risk on these, what are we doing? We didn't even talk about this real quick. This is broken wing. It's also a little bit unbalanced, right? So like the most recent time, you're only doing this when you get a 50-cent credit. That's what the limiting factor is, because it's a gap up, but the gap up of 0.25% happens all the time. That's the limiting factor. So this is going to be a unique 0 DTE
50 cents credit minimum.
Yeah. So you're just getting 50. So this what could happen here? You're buying a call just 20 points above, right? Open roughly here. And then depending on the VIX environment, okay, we're in a higher environment, so it's 40 points here. And then you're selling a triple of that, and then you're buying 2 on the top to protect it. So what you're really doing is you're buying a call debit spread and you're selling 2 call credit spreads that are wider and farther and netting out for credit. So Dan made a great point, which is going to, and I'll post all these in the Discord, going to transition to our next test. Okay. And the next test is this same idea. Again, not something I would trade, but here's the point that Dan made, that is there a place for something like this as one of the arrows in your quiver? And let me just speak to this for a second, because what's happening a lot now with the retail, I would call the sandbox that we live in is like sophisticated retail options traders. So people that have a good understanding of the market and how options work, and a lot of them are moving towards automation. We have an automation platform with a goodly number of users now. We're launching publicly. It's been in a beta for quite some time, and people are realizing, hey, this automation platform is giving me an opportunity to maybe trade something that I wouldn't want to manage manually. Right. And so here's again, not something I would trade. This is a MAR of 0.1, right? But here's what's interesting about it. This is a different setup than the other. The deltas are different, but it is also broken wing and unbalanced. And if you look at it, so this is going back, almost 10 years here. It's up. It doesn't have a great CAGR, but again, the point of this, and those are based on the allocation. Okay. The point of this is that it might trigger an idea for you to create your own backtest that makes sense for your situation. And if you look at it, what you'll notice is since dailies, dailies started right around here, and I can run this since dailies, but since dailies, it's had some better occurrences. So you look out on the long term and you think probably not something I'd get real excited about. Look at a trade log, and here's what can happen. I'm going to give a shout out to Rusty because he coined this term. This is we call this a yachtsy. Okay. So what happened here?
It lands in the red basket, right? That's what you want.
Yes. That's right. Yeah. Rusty, do you want to talk about this one and kind of what happened with the story?
I think Dan can probably do even better than me, but it's basically you want to get to the short, right? Your max profit. Because what are you really doing with this trade, right? You're buying, you're long. You're getting a credit for it, but you're really long at the end of the day, especially if you're down, because you're buying a pretty close to the money call, right?
Close, depending on where VIX is. I mean, this is 70 points
That's
away.
fair. You're right. Yeah. So you're but the point is you've got this long call, and you want that long call to be super in the money. And so, but you've got 3 shorts, and you don't want those in the money at all. So your ideal is to get to the short and expire right at the short, and then you can get $30 for it, right?
And that, here's an example. Like, look, you can see the max winner, but here's one.
So never actually, yeah. So you never even get close to $30. Your best is you might get $10.
Right. Yeah. Yeah. Your best is that your short is 10 above. So the best is a $10 credit, and you can see here it happened. This winner here, somebody is going to say, how's a winner bigger than the $10 credit? Well, it's adding the credit that you got on entry. And this one, again, these deltas are all a little different. And as the note,
it's 10 wide. That's my bad. I saw the plus 30. I see it's only 10 wide.
Yeah.
So yeah, so your most that you can get is the credit plus $10.
Yes.
Because you're opening and closing for a credit both, which is
that's right.
Fun when you get that.
Here you go. So this is a Yahtzee, right? So you opened it. Your long call is $60 or 60 above.
Right.
60 points. Your short call is 70. So you want to get to 60. You don't want to get to 70. That's like a William Tell shot, right? Like William Tell makes that shot. You don't have a long way to deviate on either side. Now, if you don't get there, what happens? Make a couple dollars anyway.
Yeah.
So,
you make real quick. Yeah. You make a couple dollars. And what I like about this, if you look at some of the dates that the recent dates, Wednesday, April 23rd, Tuesday, April 22nd, Thursday, April 17th, that's in the middle of this craziness, right? You know, unprecedented craziness in the market. So part of this thing is, because here's ultimately what you're doing here. You're buying, you know, your first call that you're buying is like a 10 or 15 delta, right? On the upside. So you want a big move. And as I think we talked about yesterday, correct me if I'm wrong, Matt, we looked at in the last, was it how many years? There's only been, was it?
So that was, I think, a 1% move. This is a 0.25% move with a premium. So in the last 9 years, that's happened a lot more. But yeah, the 1% moves are very, very infrequent.
Yeah. What I was going to say real quick is that really, you know, when I've always, you know, I remember these just from, sometimes they've been painful, but when you've had over the last 20 years or whatever, when you've had, you know, 6, 7, 8, 10% corrections, people say, well, what rallies are you nervous at? I'm nervous of rallies after a correction because it's like to rip your face off.
Yeah.
And this strategy actually benefits from that because you get this really good move up, and the way this trade is structured, it's way out of the money, and all you need is a couple to get the Yahtzee, as Rusty's coined it, get in that 10th area, and if it doesn't, you know, you make a little bit, but it's an interesting trade, and I think but you know, if it's not, the reason that you like the mechanized trading, because if it wasn't if I didn't have it mechanized, I'd forget to trade it.
Yeah.
Or I wouldn't even, I'd miss the trade or something like this. But if you have it in ready to go, and who knows, you know, even if we're not in a correction, if we have a 100-point move down next week or 200-point move down, and then we come back, this is where this thing shines. So I think having it in the queue is really good.
And so let's look at one more. We're going to look at one more variation.
Before we do that, one thing I do want to point out about trading this, on April 22nd, can you hit the trade replay button on that? I just want to look at that because I'm looking at the max loss, max profit numbers. So here's the issue though. So if you look at the beginning of the graph, you get this for about $2, right? The premium line then is the yellow line. So you're getting it for a couple dollar credit, yellow line, Matt. Okay. Look at the peak there. Look at the peak there. Look at the debit. So that's a debit.
Yeah.
So no.
So here's the yellow line.
Right
yep. Oh, I was going to just show this right here. 50.
Yeah. So the point is that it pumps, right? So you don't want it to pump that far. So my point is that you put this on for a $2 credit, but now you're staring the net there would have been a $15 loss.
It almost got to your short strike. That's where I was going. Your short strike was 53.10 and it got to 53.06, which
so
is
that's again, you just got to be now eventually what happens? Well, it goes back down and you can see at the end of the day, it held all day and then at the very, very end finally dropped off and you got a decent win out of it because it landed in the breadbasket. But the point was it had pumped so much, the market went up so much, ripped, that you were staring a pretty big loss because your max loss is what, $3,000?
Yes, it's $3,000 minus the credit. So
2,800. So you were staring about half a max loss in the face, and it ended up being a great trade. So the point is this: there's no exit condition here. In this version of the trade, it would be hard to trade this non-mechanically. If you're staring at this.
Oh my goodness.
Yeah.
And
that's all I'm saying. That's all.
Yeah. And so Dan's point is a super important point. I mean, as the note says, not something I would trade, but there might be a nugget there. Dan made this great point. This might be the kind of thing that you develop into your own back test where this risk reward, to Rusty's point, you're making, if you look at these, you're making what, less than $1 sometimes, $2 and higher VIX for a 3K risk. So that's like a 15-to-1. Now, again, that's not the kind of ratio I'm looking for. You do have the potential carrot of hitting it in the bread basket, but is it worth developing a couple of these to add to your quiver to maybe in a position when you might say, I have an unreasonably long, I'm noticing my positions are unreasonably long delta today. Is there something that might fit in with that? You might be able to develop your own idea that fits into that. So here's the final one we'll look at. And so let's look at, we're going to be a little more precise about the strikes on this. So this is again, it's broken and unbalanced. So you're buying one call in the ratio. You're buying a 5 delta call. Okay.
Yeah.
Your shorts that you're selling are 10 above that. Okay. So your bread basket is the shorts. Okay. But the risk past that is your 20 above the shorts. And you have 2 of those. So, again, you have risk. Let's look at the 22nd, Rusty. The same thing happened on this trade. To your point, when the market got up to 53.06, 53.07, here's the same time frame we looked at on the other trade. What's different about this? The deltas are different. The deltas are different. Because it's a 5 delta, your credit is less, but your odds of winning are higher. Now, this is different.
Well, no, your odds of winning are lower. You're at a 53%.
Well, okay, let me clarify. Your odds of not getting past the short strike are higher. You're exactly right. And that brings up the final point.
Out completely or lower. That's
correct. And this one doesn't have a minimum credit. That's why. That's why your average losers are 12 and you lose 50%. So all these will be shared. We've had a great show, guys. We're going to wrap up here in a minute so people have time to catch a breath before the market opens. And anybody looking at futures, how are futures doing? Are they above 70 points? Do we need another?
Yeah, we're up more. Everyone's liked your talk, Matt.
Do we need more dialogue about the Rust Belt in the U.S.?
No.
Should we talk about gene manufacturing evolution in Western Kentucky in the late 90s moving out of Western Kentucky? No? Okay. Well, with that being said, everybody stay safe out there. I'm going to post these in the OO Discord. If you're not in the OO Discord, I don't even know what to say at this point. But have a great Friday. Thanks for tuning in. And